Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Thursday, the 4th of September, 2008, and we saw the market sell off pretty hard here today. The S&P 500 spiders lost about 2.9% here, losing $3.76. Obviously, the level of support that we've been watching has been 126.5, and as I said yesterday, either way that the market breaks from this range, 130.5 as far as the resistance and 126.5 as support, was going to determine the next trend, and obviously we have a continuation to the downward downside. Again, I'm going to point to the direction of the 50-day moving average. Whenever the direction of the 50-day moving average is lower, you want to be on extra high alert, and as I said yesterday, it's reason for concern. So today we saw those concerns justified as the 126.5 level was broken early on, and that brought about the real selling in this market. On the blog earlier in the day, I was saying that now that this level's been broken, here's where the next potential support is, where we might see a bounce develop. There was no sign at the time, and there's still no sign of any bounce, as the market just really got hammered in here. These levels are the areas where this market has the potential to drop down towards and I think we'll probably eventually make it down there, but it's not going to be straight down like we saw today. Today we just saw some real panic in here. Again, as this range of 126.5 to 130.5 was broken. So we can look at the height of this range, about 4 points, subtract it from the breakdown point, and that gives us a price objective down here at about 122.5. So I think that we could be heading there. I don't think it's going to be immediate, but obviously, it's very difficult to make money trading long when you've got such a fearful environment with people liquidating, and you don't want to buy the market at any time when you have a declining daily VWAP like we saw in here all day long. So the S&P 500 clearly broke in here today, confirming that this bounce on the weekly time frame that had occurred on light volume. Again, we have a holiday shortened week this week with just 4 days, and we've already matched last week's volume. Add on tomorrow, will probably be somewhere up around here, maybe even higher if we really kind of clear the decks with some fearful selling. So this is our next potential level where the market will hold, and again, it's only a potential area where we might see buyers. It's not a reason ever to get involved. You don't want to buy weakness. You want to look for evidence that the buyers have refound that control, and right now there is no evidence. The market finished right on its lows. We saw big volume, and it's even trading lower here after the 4 p.m. close right now. So continues to be a very dangerous market. Yesterday, let's take a look actually. The Russell 2000. The Russell 2000 also clearly this market is in trouble. It's back below that $72 level. This market has been holding up the best, and it was appearing that perhaps there was a cup and handle forming in here, but I think you can scratch that off the list right now as far as a potential formation. You can't look at a pattern and get locked into a belief about it. Your plan has to be dynamic. The market is dynamic. It gives us new information each day, and we have to listen to the message of the market. And when the market breaks down, yesterday I said that it looked like the first level of important level is this 73.40. That level was broken. Then I said it looks like $73 would be the next area of potential support, and if that breaks, then we're probably heading for a test of 72. 72 is what we got. We're right down at that important level, and you can see here on this hourly time frame that we're still in this area, but looking at it realistically, we've got a lower high, we've got more frequent test of this support level that used to be resistance, and on the daily time frame, it's not fully broken in here, but with all the damage in the other markets, it's still there's no reason to get involved on the long side in here. This area again is going to have to be taken over before we can really have any belief in any rally attempts, and that again is the $76 level. We've backed away from there hard once again. Last time we had a real hard break from there. This time we kind of held up a little bit more in there, but perhaps we're setting the stage for a larger break. So don't think that this market is in any condition to be bought right now. The semiconductors really is the main group that led this market lower. A lot of people have been focused on the financials, but it's the semiconductors that led this market lower as they broke down 3 days ago. And yesterday we said, that it looked like it was heading for a year low. Not only did it take out that low and close, at new lows for the year and for many years in here, now we've got to re-examine some of these bigger time frames, those longer term time frames rather, and take a look at where we are in relation to what's been important here over the last several years. And now we're definitively below that $28 level. Here's where we are at 26, just to give it perspective. I'll draw that line on there, but 24, 23 and a half doesn't seem unreasonable. A trend once established is more likely to continue than reverse. And as I said yesterday, with natural gas and oil, it's very hard to pick a bottom just because it seems like something is down too much. There will be opportunities for very, very aggressive traders to take advantage of any bounce in here. But what you want to see at a minimum is you want to see the market probably open lower, toy around with that daily VWAP, hold on to it, and then trade any upside there with maybe a stop below the daily VWAP. But that's a very, very risky game. Just because it's down a lot doesn't mean it can't keep going lower. We saw this week that there was news of a hedge fund failure. Maybe there's more out there. News and surprises follow the direction of the trend. Those guys whose hedge fund blew up were involved in oil and natural gas, and they had horrible months. And it's we can see now that they're part of the problem is that they've been liquidating into that, and the news only comes out after the fact. And the fact is, only price pays. Price points to a very bearish picture all around. You can look at it in the best case bullish scenario that you can make is that this market's down a lot, down too much, whatever, but not compared to what the next guy's going to sell at. Intraday as well, I'd said that perhaps this would be a level of support for the NASDAQ 100 at 44 and a quarter. I also caution that it's not a reason to buy because there was zero evidence that the buyers were taking control. We saw the $46 level broken in here earlier in the week, and that really showed the importance of that level, and I'd been stressing the importance of that level over the last several months. And with the declining 50-day moving average, these rally attempts typically do fail, and here's more proof of that. So 50-day moving average is declining, guilty till proven innocent. We were looking at perhaps the similarities between here and there at this point, but again, it was the breaking of that $46 level that really showed that the sellers had taken back control. And we can always draw these lines across that say here's where support is, but the thing that most people don't tell you is that's only potential support. It's only a potential level where we want to look at the market and see if there's evidence that the buyers are taking control. And it doesn't matter what time frame you look at, there's just zero evidence that the buyers are establishing any kind of stronghold in here. This market remains very dangerous. It's down a lot. It can't keep breaking. We've seen was pointing at some of the market leaders looking vulnerable, such as Apple. Google continues to break down to new lows of this move in here. Research in Motion, and a lot of the other ones. There's a lot of danger out there. Fortunately, a lot of the stocks that I had mentioned on the intraday live analysis 2 days ago as shorts potentials were the ones that really got hit the hardest. So that's important to see that there are opportunities for trend traders if you're focused on the right areas. And this Mexico, as I mentioned yesterday, looked like it was on the verge of a breakdown with the EWW, and it continues to break lower. So there looks like there's a lot more downside in a lot of different areas in this market. You better have a very strong defense if you're involved.